Maarten-Jan Bakkum is a global emerging market strategist at ING Investment Management. Thank you so much for joining us. In terms of what we're seeing, there's always a belief that actually if the recession happens in our Western countries, it's the emerging markets that would be strong enough to take us out of it. But we're also hearing that actually the emerging markets are just scared of being dragged down into the recession with the rest of us.
Yeah, I think emerging markets are still very much linked to what's happening in the US and Europe through trade channels, but also through capital flows. So I think emerging markets have to watch out that they don't, that indeed they do enough to keep the damage limited.
And are you seeing any troublesome signs out there? We just heard from, the Bank of Indonesia leaving that interest rate unchanged. Brazil was much more worrying because they're really concerned about growth despite very high inflation.
Yeah, Brazil had a surprise interest rate cut. Maybe not the smartest thing to do because inflation in Brazil is still on the high side. And that's actually a trend we see in most emerging markets, that there's still sticky inflation, growth is coming down, actually faster than we expected. And there's very little room to ease policies.
But so overall, if the US goes into recession, if Europe goes into recession, is it inevitable that actually the emerging markets will follow suit?
Some of them might. Well, if the US and Europe go into recession, several emerging markets will also go into recession. The more open economies in Asia, countries that are very dependent on capital inflows to keep growth at high levels. But there's also some countries that can actually do very well in that environment, or at least relatively well.
Such as China, of course, because they're so powerful.
Yeah, although China has also had little room to ease policy compared to 2008. But China will have decent growth, India will have reasonable good growth, Indonesia will be okay, maybe Poland and Eastern Europe will be all right.
And so which are the ones that actually worry you the most? I mean, I know you talked about these countries that are so linked to international trade, but is there anyone where you're seeing that coupled with wrong government spending or wrong central bank action?
Yeah, I'm a bit worried about, indeed, the most open economies. So Korea, Taiwan, they could have a bigger slowdown than the others. And countries like Turkey, South Africa, well, there still is a big need of foreign capital to keep things going. If risk appetite stays weak for a while, these countries might have problems to find the capital to finance their deficits.
Maarten, if we talk about currency wars now, is there a concern that this is actually going to become trade wars? Because this would be a real disaster and real loss for a lot of these emerging economies.
Yeah, we see some countries indeed making some steps to protect their own industry a bit more. Brazil is again an example. They have been a bit protectionist in their measures, but it's still very small steps. So I think the trend is not positive, but it goes very slowly. And probably the pressure needs to be higher before these countries really make big mistakes.
Maarten, we're talking about China. I want to focus a little bit on this country because, of course, we're so reliant and so dependent on what happens there. Are we going to see much more flexibility of the yuan? Is it finally, a realization within the Chinese government that they just need to open their doors more?
Yeah, it seems to be the case. But as always in China, it will be a very slow process, and they will not allow, let's say, the world to push them in a corner. So the trend is also positive there. There will probably be more liberalization of the yuan, but not, I don't think in the next few years. That will take longer.
Time, 4 or 5 years. Yeah. Maarten, thank you so much.